Up next, Disney falls short on earnings despite an increase in subscribers.
The WBBM Noon Business Hour continues.
Disney beat expectations for new subscribers in the last quarter, but fell short on earnings. We're joined by Tim Hanlon, founder and CEO of the Vertere Group based in Chicago. Tim, thanks for joining us today. Give me the good news and the bad news when it comes to Disney Plus.
Well, the good news is that they're continuing to be on a tear in terms of adding new subscribers. They are, in many respects, ascendant, where perhaps a Netflix, by comparison, may be in the opposite direction. I mean, Disney Plus is still growing as a brand and as a proposition, and is aided and abetted by Disney's other streaming offerings, that being ESPN Plus and Hulu. In some cases, Hulu with the extra live TV component, and various promotional bundling and those kinds of things and pricings. And it is still very much a growth story. And collectively, the good news is that Disney, across all of those services worldwide, essentially is in the 236 million direct-to-consumer subscribers, which all told is the biggest footprint, perhaps, save for Netflix.
But this is all in service of what some analysts say is a $30 billion content machine. And even though that content is attracting eyeballs, is the advertising market sustainable?
So that's clearly part of the bad news, right? So the investment is gearing up, but I think what you heard from Bob Chapek and his team yesterday is a commitment to rationalizing costs, which is code for we're going to not spend on too much frivolous stuff, perhaps content, yes, but maybe with less people. There is a movement to become much more collectively as a corporation, a more direct-to-consumer company. In many respects, streaming and the Disney Plus effort is actually starting to creep into the strategy for the rest of the company. So how does, for example, Disney Plus interconnect with the Disney parks and add value as a fuller subscription, not unlike Amazon Prime, where you get multiple benefits, not just a streaming service? Go ahead.
I was going to say, if that actually works, does this prevent Disney from falling into what I like to call the HBO trap, which was back in the 90s and the 2000s, they needed a Sopranos or some kind of show that would get people talking to get people to continue their HBO subscriptions to pay for all the other stuff?
Yeah, they clearly see what Apple TV Plus has and some of its standout shows. And yes, one hit can make a world of difference. But I think the status quo for Disney on the streaming front is full speed ahead. I just think one of the things that's happening now, we can talk about this another time, is there is a secular reality that's starting to hit the legacy business, linear cable, broadcast television. That is in secular decline, and it is hitting all of the broadcast TV stocks similarly to Disney. So I think they're part of a bigger issue in linear television, finally perhaps starting to see the wheels fall off that traditional business after all this speculation.
Tim Hanlon, founder and CEO of the Vertere Group based in Chicago. Thanks for joining us this afternoon.